Well, good day, all. Ira Epstein, and here we are on Thursday, and this is December 4th, 2025. I'm late and have not put out updates because my family, we moved. And we left the state of Illinois, moved over to Indiana right on the water, and it's absolutely stunning. Of course, it's cold and snowy, but the heck with that. I mean, it's like living in the woods. It's really very pretty. We don't have yet the trucks. They haven't shown up. We just came into the house, and they destroyed my house, obviously, as they had to move everything and pack up the trucks after 30 years of living in that home. So I'm sure many of you have gone through it, so I apologize. But getting to the marketplace, let's talk about it. The monthly personal income spending and PCE index data for September comes out tomorrow at 7:30. They're looking for the personal income up 0.4% month over month, but the spending to do the same. So there's really not a savings or a loss in any way there. University of Michigan preliminary December consumer sentiment indices come out at 9. They're forecasting it to be an improvement, going up to 52 compared to November's final reading of 51. The Federal Reserve will release October U.S. consumer credit. They're looking for it up 10.5 billion versus the September reading of 13.1 billion. In terms of market action, well, what the markets are focusing on is which way does the Fed go? Now, you have two different elements going on. The big bets are being made that the Fed's going to cut interest rates a quarter point and then probably go into a holding pattern for a month or two to see if they've done enough. We will get the dot plot, and that's going to be very important because we're going to see what these members think the Fed is going to end up doing for the year. I've heard some people say maybe we only get the equivalent of 2 or 3 cuts in total. I don't know. We'll see what it does. As long as the market is staying, in my opinion, with labor this strong, and I want to use that word. I know the ADP number came out weak, but I also know that that's not the case in the Challenger Gray that came out today, half of the cuts that they saw last month. And if you looked at jobless claims for the week, they were down in both categories, the initial and the continuing. So it's a very mixed bag, and that's something that you want to pay attention to. Let's go to the first chart and get this and start talking. In Google, if the market starts coming down under these lows, it could pose a problem. I've said to you repeatedly, I don't think that this gap will be left. In other words, I expect the market to try to fill it. We'll see if that is in fact the case. As you can see, the swing line is turned down with lower highs and lower lows. So that part of the market is bearish, but the market's still well over the 18-day average of closes, so the bias is up. The most I look for at this point is if the market did break going back to the 18-day average, and it could be a mixture of that number climbing and prices dropping a little bit. As we take a look at the Bollinger Bands, the market stayed over them for 3 business days, and then it got hammered and pulled right back. This is so typical. Is there anything here that can turn me immediately bullish? Well, I think that I could make an argument that if we took out the last swing line high, this one, right here, that could get you back into the bull camp, 326.85. I'm not expecting it right away. And I see a market that has got the slow stochastics down here. Are they embedding? So follow me. You have to have both numbers over 80 for at least 3 days in a row. You don't have it. Here's a 79 reading, as you can see. The next day, right here, you go to the 80s. So you got to prove that you can do that tomorrow. Meta announced big layoffs. They're going to do cost cutting, not cutting costs, cost cutting. And that was welcomed by the market. It jumped rather sharply this morning, got up as high as 676, but it lost most of that back. It still closed up $21 though at the Bollinger Band. How often do I tell you the first challenge of a Bollinger Band? Be careful. But the trend is up as I see it. This is where Dutch Brothers should have its next set of problems. The market swings between, as I've told you over and over, the lower and upper Bollinger Band. That's what it tries to do, back and forth, and I look for the market to continue doing that. In Roku, the market is not acting like it wants to come down and take out the most recent lows that it just had right through here, but it's also not in a bull pattern either. Netflix, I'm still not one in the camp that wants to see them win the Warner Brothers. I don't think they need it. I think there's other more interesting bids out there, and the market has punished Netflix for trying to bid for them. You don't have to agree with me, but you can't argue that prices have been falling. When we look at Uber, Uber's come alive. It's told you that it got too cheap when it got down into this area here. I'm not even going to try to fix the chart. I can do it one way, and that's about it. And when it did that, it just started coming together and rallied back over the 18-day average. In Tesla, we're looking at a market that got hit once, came back up. Is it going to make a new high? I don't see why not. I mean, I've told you, if they're just going to focus on the robotics and go with that, he's going to have himself quite a company again. The cars don't excite me. Joby, as soon as Citi started covering Joby and got bearish and said it's $10, the market gave them a one-day break after their report came out, right here. And since then, it's gone back up. Now, I don't think it's got much left on the upside. I think it will stall between right here, the 100-day average up to the upper Bollinger Band. But I do like the company long term. XLF, as you can see, the trend is up, the bias is up, and you're coming for the highs in the financials. The market is betting that a series of rate cuts are coming, and that will help the financials. When we look at the industrial sector, it too is betting that the lower interest rates will spur things on, but it is very overbought. You're overbought as can be in the energy sector. You're back up to the highs. Don't for 1 second, at least this is my opinion, think that the U.S. has made headway with Putin to just abandon his captured lands. He's going to want everything. He's going to want lands in the Donetsk district that he hasn't even captured. And why not? He's got the momentum he believes going with him. He spent these years doing this, and he might as well go for it in his mind. In GLD, the trend is up, but all of a sudden momentum is waning. Now, it's still embedded to a degree here, but if it starts getting that red line under the 79 level, then we can get the correction back where I've looked. I had clients that are subscribers of mine coming out on this first challenge as we got up to that Bollinger Band, and so far we did okay with that. Palantir, I am bullish, but it's overbought. I wouldn't go chasing it right here. Microsoft, it just can't lift, and it has so much going for it. It's been a dog. It's really that simple. It's not been a very good thing to own. BND, all you hear about is falling interest rates are coming, right? That's not what's going on here. This market dropping means that there are higher interest rates coming. So different people are making different bets all over. The dollar, by the way, I'll come back to that, has gotten cheap enough against that 2,800 level to see short covering, and you're probably getting the longs coming out of FXE in the first challenge now of the 100-day and the upper Bollinger Band. So now what do you do?